These seven golden rules will make you an elite market structure trader. Hello everyone, welcome back to the channel. In today's video, I'm going to be showing you the seven golden rules that when you apply it to your trading game, it's going to take your technical analysis game from 70, from 30 or from 50 to 92.7%. Now, this strategy has been back tested and forward tested, and it has proven efficient across the various financial instruments, right? So you want to stay to the end of this video to watch how I explain this set of rules, and you can go to your chart, apply these rules, back test them, and forward test them, and it will change your trading game drastically. All right. So without further ado, let's dive into the video. So before I go into showing you guys these seven rules, let's quickly do a recap on basic market structure, right? Understanding swing structure. Now, this is if you agree with me, this is how our basic market structure is projected, right? Where we have here we have our higher high. Let me take this out quickly. Where we have our higher highs, our higher lows, and our lower highs and our lower lows, right? For uptrend and downtrend market respectively, right? We have something like this. Here is our higher high, here is our higher low, a higher high, and also a higher low, a higher high, a higher low, right? And then what is our anticipation or what is our projection? The price is going to go ahead and create a new higher high, right? To continue the trend. This will be our projection for the market, right? So if we are trading this type of market, what are we going to do? We are going to be looking to take trades from either of these zones, right? Depending on the element of price that is at play, be it imbalance, order block, breaker block, whatever it is, right? And then we get to take trades and ride it to the new highs, right? So what are we going to do? If we want to actually take this trade, for example, if we want to take a trade from this trend, for example, we are going to find out the swing structure, right? Because the swing structure is actually what the market is doing right now. It is the recent high that was taken out, right? In the case of in an uptrend situation. And in the downtrend situation, it is a recent lower low that was taken out. So this zone right here is now our new swing structure, right? This is our new swing structure. This was our swing structure. This was our swing structure. This was also our swing structure right here, right? So each time that the highs were taken out, right, we refer to this zone here from the higher low to the new higher high that's formed. We refer to it as our swing structure, right? The higher low to the new higher high formed is our swing structure. But in the case of the downtrend, it is the lower high to the lower low to the new lower low that is formed, right? That's our swing structure. Why am I showing us this? Because what I'm going to be explaining to you guys, swing structure is very important, all right? So let's dive into what I have for us. So let's say a market is downtrending this way, the market is moving this way, right? This is a perfect downtrend, right? Then something happens. Then let's say the market takes out this high and then comes down this way and then move this way and then come down again to take out this low and then move up again, right? Now, this is a lot of activity by the market, right? This is a lot of movement by the market. So I'm going to actually take our time to break this structure for you, and we're going to apply these seven golden rules to this structure, and you will see how your eyes will be open to a new level, right? A new way of trading the market structure, and you can never unsee it once you see it, right? So whenever market is trending this way, we say this is a break of structure, refer to this zone as BOS, right? So this is a BOS, and this is also now this is not a BOS. We don't refer to this as BOS, and I'm going to explain why. We refer to this as what? As sweep of liquidity. And what happened here, we refer to this zone as our change of character. Now, what is a change of character? Change of character happen when market, changes direction from the downtrend to the uptrend, or from an uptrend to a downtrend. Whenever it happens, we refer to that zone as a change of character, right? So, and we are going to refer to this zone as what? You're going to agree with me. This is now what our new BOS. Why? Because we have a change of character and price has gone ahead to create a new high. So this is a BOS. And also this is what? This is a BOS as well, right? This is a new BOS. right? Now, why did price have to take this low out? This is what I'm going to start explaining. I'm going to start with this one. I'm going to start with why this zone is not referred to as the BOS, right? Why is this zone not referred to as a BOS? Because this is the last break of structure that happened right before the change of character. Now, if you agree with me, this zone here, a lot of buyers, right? A lot of buyers are going to have their stop loss beneath this low here. Maybe price will be reacting from a zone, an old high or an old low somewhere, and they are going to actually take the trade and place their low, their stop loss below this low here, right? Something like that. And what did price do? Price came here, even when they saw that this was a downtrend, they are still going to go ahead and do it, right? Because at every low and high is liquidity, right? So that's what the market is all about. So their strategy is going to tell them to buy from here and place their stop loss below this zone. So they are going to go ahead and buy from this zone, right? But look at what price did. Price came back and took this liquidity, right? Took this liquidity out. Price also went up and still took this liquidity. And because price actually broke this low, because price created a new low, lots of persons are going to be on this trade, right? They are going to assume that price will come here, we test this zone, and then ride to create a new low. So many persons are going to be on this trade, right? So that means above this zone here, above this zone is people's stop losses. A lot of persons are trapped in this market. So when price takes out this zone, we call this a change of character, right? Price has taken the liquidity, right? So once a change of character happens, the last BOS is no longer a BOS, but a sweep of liquidity. We refer to it as a sweep of liquidity. Now, the price will go ahead to create a new high, continue to create highs, right? And then still come back to take out the previous higher low, right? To take out this low higher low that was created, this higher low here, right? Now, I know you'll be wondering, why do price have to take out this low, being that it created a new high, right? Why? I mean, this is supposed to be a change of character, right? Trading the normal market structure, you're going to, do something like this. You're going to say, okay, this is a change of character now. This is a change of character, right? So normal market structure traders are going to say this is a change of character. Then what is going to happen? They are going to place their what? Their buys here. Sorry, their sells here, right? They are going to say, okay, because of this, price is going to come to this zone and sell off, right? So they'll project that price will do something like this, do something like this, tap into this zone and sell off, right? But that's not what price did. Price, this is just, a liquidity trap, right? It's a liquidity trap just to, get uh, the sellers, right? Just to get money from the sellers or to get liquidity from the sellers, right? So this is why our trading game is above the normal or the basic market structure traders, right? So let me just show you. Let me take it slowly how this whole thing is formed again, so you can have a better understanding for some persons that are lost. So this market was coming from let's use an uptrend situation, right? So market was coming from an uptrend, right? An uptrend, beautiful uptrend, right? And then this happens, right? This happens. Now, when this low is taken out, lots of basic market structure traders are going to say, okay, this is now what a change of character. So what do they expect? Let me pause this for here. They are going to expect price to come to the other block that was responsible for this for this change of character, right? They are going to label this zone as change of character, right? They are going to say this is a change of character, and they expect price to come to this zone and then sell off, right? Sell off to create a new high, right? But this is not what is going to happen, right? Instead, price actually came to to take out this liquidity here, right? This liquidity before eventually moving, right? So I'm going to be showing you guys the 7 rules now. So don't worry if you don't get this explanation still. With the 7 rules, you are going to have a perfect understanding of what I just said, right? So let's go back to, let's reset the 7 rules quickly. So what are the 7 rules of this trading masterpiece, right? Because it's actually a masterpiece. Okay, let me try to reduce the font size. Let's make it 24. Okay, so these are the 7 golden rules. Now, the number one rule states that, okay, let me clean all of these things here. Let me clean all of these things. Try to bring it back up. Okay. So the number one rule states there must be a sweep of liquidity, right? So there must be a sweep of liquidity. So what is a sweep of liquidity? I already showed you guys when the market is downtrending this way and it comes down and then moves to break structure afterwards, right? We refer to this zone as we refer to this zone down here as our sweep of liquidity, right? So this is our sweep of liquidity. So the last sweep before change of character, the last sweep before change of character is referred to as our liquidity sweep, right? So now we have a liquidity sweep here. Now, what's the second rule? It says there must be a BOS after the sweep. Yes, a BOS or a change of character, right? A change of character. Okay, this is it. There must be a change of character after the sweep, right? And the number three rule says price must retrace to create a liquidity. That means price must, after this creating a change of character, price must come here, create a liquidity, right? And then move, right, to continue the trend. Then the number four rule says the liquidity created should be V-shaped and obvious, right? Just like what I just gave you guys now. It should be V-shaped. It should be V-shaped, right? And the V shape should be obvious, right? And the number fifth rule says the liquidity should be close to the protected high or the protected low. Okay, beautiful. So guys, whenever there is a sweep of liquidity, this is a sweep of liquidity, right? So whenever there is a sweep of liquidity, we refer to this zone as our A. This then becomes our A, right? Then this liquidity that is formed becomes our what? Our B. Becomes our B. Then where price is going to start retracing from becomes our C, right? So I have to use these letters just to help us understand them better, right? So now we have our A, our B, and our C, right? Now, after this liquidity sweep, and then there is a break of structure afterwards, what this low now becomes what? A protected low. This low becomes a protected low. We don't expect price to dare come and take out this low anymore, right? Because if price take out this low, our projection has been is now nullified, right? It's no longer valid. So we don't expect price to take out this low. And this is the confidence that we have whenever we are trading this structure, right? So now we have our sweep of liquidity, we have our A, our B, and our C, right? Now, what's the fourth one? The sixth one, sorry. It said price should retrace to sweep the liquidity created. Now, so what are we expecting? We expect price to take out our B always. We expect price to retrace and take out our B, right? So that means if we have any element of price just below here, right? Let's say an order block, an imbalance, or a breaker block, or whatever it is, we can just decide to place our mark out our zone, right? And then we'll place our buy position here, and then we'll cover this low, right? And then we target this new high that was created, or whatever is your desired risk to reward, right? You can decide to maybe three RR or 4 or 5 or whatever. You can decide to target this high here, right? And so what is our anticipation? That price is going to come down here, price is going to do something like this, and then eventually what takes out this low, and then boom, takes out this liquidity, right? And then boom to the upside. So this is our trend. And what did he say? Finally, ensure you are following the trend, right? Ensure you're doing this on a higher time frame, maybe 1 hour, 4 hours. And this strategy or this rule works even more efficiently when you are in line with the trend. Let's say you are in line, well, let's say price was actually trending upwards and then a sharp retracement or a sharp downtrend and then an uptrend follows suit, right? This strategy is very, very efficient, right? So what we're going to do now, we're going to look at chart examples, right? We are going to look at chart examples quickly. I see one forming here already, but since it hasn't formed, let's just go back to, okay, let's just analyze this one quickly, right? This is what I'm talking about. Now, if you check let's check our higher time frame and see our daily time frame, our weekly time frame. You're going to see that this particular pair, it has been this is an uptrend market, right? You can see that this pair has been moving, higher highs, higher low, higher high, higher low, higher high, higher low, higher high. And you can see what this pair has been doing, right? It has been, and then it failed to create a new higher high, right? Which led to a change of character at this zone, right? Led to a change of character, and price has been trying to, selling, right? Price has been selling afterwards. You can see price even created a BOS here, right? After this change of character that happened here, right? So you can see prices are downtrending. Then look at what happened afterwards. Look at what happened. Look at what happened afterwards. The price then decide to do something really serious, right? This zone, this was the zone that was responsible for the break of structure, right? You can say, okay, this zone here is a change of character, or some persons might argue that it is this zone that's a change of character, or whichever of this zone you want to actually argue to be the change of character, right? It doesn't really matter. But what we are trying to say here is there was there is a change of character here, right? There is actually a change of character here. And you can see their price is creating a series of higher highs already, right? So what is our anticipation for this, right? We are expecting that price is going to come down. Remember, this is a weekly time frame, right? So this is not a 4 hour time frame. That's why any break of structure or change of character you see, you have to take it seriously, because each of these kind of took about 1 week to form. So I mean, you wouldn't want to use your lower time frame trend here, right? So just look at our daily time frame. Just look at the daily. You're going to understand what I'm talking about, right? Then let's go to the 4 hours. You're going to see even better what I'm talking about, right? So look at the 4 hours here. We had a downtrend situation here. This is a higher high. You can see there was a breakout structure right here, right? But look at what price is, and then we'll see this is our change of character, right? This is a change of character, and this is another higher high, right? And then this is our higher low, right? So let me just clean all these things now. In this scenario, you're going to agree with me that, okay, we have our change of character here, and we have our BOS here, right? And then what is our projection? Remember our rule, that price is always going to come back to take our B, right? So this zone then becomes our A. This is our B. This is our B, right? This is our B. And this will then be our sweep of liquidity, right? This is the last low that was swept according to this downtrend that happened here, right? So this was our sweep of liquidity. And then this is our C, right? So what do you anticipate? The price will come down, take out this B here, and then give us a trade to the upside to continue the trend, right? So this will be our projection on these 4 hours, right? But let's look at a clearer example that already played out. Let's look at an example that already played out. Let's see if I can catch one quickly. There are lots of them here, but I want something really easy for you guys that you can spot. Okay, just look at this. Look at this. You see that we have a what? We have a sweep here. This is for an uptrend scenario, right? Remember, we have a downtrend scenario and an uptrend scenario. This is for an uptrend scenario. We have a sweep of liquidity here. This is a sweep of liquidity, of internal liquidity, right? And then price decide to go ahead to give us a breakup structure, and price give us another breakup structure, right? And then price came back to take out, this becomes our B, right? This becomes our B. This becomes our B. And look at what price did. Price eventually came back, took it out, and then gave us a good trade, right? So now, remember I said there are uptrend scenarios and there are downtrend scenarios as well. So you want to take out your time to really understand each of these scenarios so you don't easily get confused. Like what I just showed you now is for the uptrend scenario. And what I showed you here, right? What I showed you here was for a downtrend scenario, right? So you want to take out your time, watch this video over and over again so you can get this concept. Because if you do understand this concept that I'm showing you guys now, it is going to level. Okay, look at another sweet example here. This is another beautiful example. Just look at this, right? We have our, okay, this is a downtrend. This is for a downtrend scenario. Look at this zone here, price coming down, price creating BOS, and then look at here, we have another BOS, right? But look at our price. So this was the zone. This was the last lower high, right? Last lower high, and then our last lower low. But then we don't refer to this zone as a BOS anymore. Why? Because there was a change of character afterwards. So this is our change of character here. And then this zone here is now what our sweep of liquidity, and price then went up to create series of highs and eventually came down to what, to give us our B, right? So price gave us our B, and look at what price did afterwards. So we'll be now, after price giving us this B, and it went on to create a new BOS, right? It went up to create a BOS this way. So what will be our anticipation? So why other persons are looking to take their trade from this zone, right? Normal market structure traders are looking to take their trades from this zone and ride the trend to the upside. We are not doing that, right? We are waiting below their stop losses. So their stop losses then becomes a liquidity with which we enter the market. And this is what gives us an edge over those who trade just normal market structure. So we're going to place our buy zone here, our buy tool here, and we are going to ride to this high here as our take profit, right? You can see that price gave us our take profit and immediately change direction, right? So you can see how efficient this strategy is. So guys, I hope you found value in this video. If you did, please go ahead, click the subscribe button, hit the like button as well to help this channel grow, right? So thank you for watching. Go to your chart immediately and backtest this strategy to see how efficient it is. So congratulations. See you at the top. Bye for now.